Welcome to TradeTheNBI.com. This is John. This report is for the 22nd, and as we end and get ready for the holiday week, which will be slightly abbreviated, complete cyan under red here. Even though the red has faded off a little bit, you didn't get a DOC spread, meaning cyan moving above red, and steel just now coming above the negative 13. So rebuilding, restart from the bottom right at the ABM, and this is where it makes it easy because we talked about this above that 3101, which happens to be on our 5K chart algo level, interestingly enough, and supported right off of it. So again, it becomes a perfectly fine situation again as long as you're above the ABM. Bullish to the long side. I mean, the 50K is still already to that. From a NASDAQ standpoint, a little weaker. So this is interesting because the NASDAQ, where it had been outperforming, probably will be the first trigger if there is going to be one. But now in this case, you have midterm buyers in the green turning up with long-term and shorts both fading. You can see here 0.71 for red, 0.12. So red is still over cyan, and the shakeout is resetting. We are seeing here the azure just about to meet the gold again, so it's going to become pivotal, and it's going to be right up here at or near the highs. From a euro standpoint, nothing happening. Looks like Tories are doing well as far as polling and stuff like that, so the potential of a red exit deal, and that's still hanging around. But I think they're right in the middle range of where they want to be, probably to the lower side of it, but nonetheless, still fine. The spike in oil is an interesting one because it suggests that either there's a supply reduction coming or maybe the misread that things economically are still fairly decent, which is leaving gold nowhere. We kind of expected that, though. From a 5K, we had a lot of interesting action within the ranges that we've been talking about. So we had the 31.17 up here was the top side. We started to try to get towards that. The first DOC spread that started a little late. See, this is one of those things where it's like, okay, the orange crossed above, and it's just a little later before you finally got it from a steel crossing below, as well as the cyan going above. And then you had the turnaround with cyan going below red and green moving, and that created the little pop. And so it was a much more delayed DOC spread by the time you got when you were right at the algo of 309, and that actually took us below the 3100 level one. It was right here around 3101, and that finally created a buildup right over here by the time you got back above the negative 13.5, and within a broader short context, because this had been back and forth, so it's one of those where you look for the bullish tint where you actually have orange at or near the key levels, or move like this above the plus 13.5 when you get that reset. And it took a little while to build anything. I mean, it was just slow sideways going across, and then finally once you stayed above the 7.5, it pivoted, and then it continued its move right up to the peak, and then did a likewise DOC spread breakdown right over here where the PK started and faded. It was just a matter of waiting. Again, here's that cross of the steel with the orange dip below. Now, we had a dip below the red line, so you knew that any pop that came up was probably going to try and come back and retrace towards it. Did that right here as we ended up into the pre-market, and boom, took off from there once we got above that 3109 level. Couple of positive extremes, just filled those back in, and that's where we're kind of at right now. In a little bit of softness, but we had the steel crossing here, so if the steel gets above cyan at this particular point with a little bit of that orange dip below the red, which it is doing right now, could see a little bit of a turnaround back to the upside again from there, and that's currently where it is. So generally with the impeachment thing not really catching much market attention, at least from a negative standpoint, it seems fairly bullish that the status quo is going to remain. So that's satisfying the market, and that's why we've been in this broader upturn. They just don't feel like there's anything that's causing a negative, and now that those are over, I think that it's a sigh of relief. I mean, it doesn't mean that they don't think that there's going to be, an impeachment vote or anything like that. It's just that the market's betting that things are more likely to stay the same than they are to change. And we just continue to follow that until there's a change in the readings that suggest otherwise. As always, though, I'll keep putting up relevant charts. We'll go from there. Trade well.